Welcome to the Capital Spreads weekly look ahead. Today is Tuesday the 29th of May 2012, a day later than normal, really mainly because the US was on holiday yesterday for Memorial Day. So they returned to the market later on, and so far this week really we've just seen the FTSE reject the 5400 level on two occasions now. Yesterday it started the week on a good note, rallying higher, but it rejected that level in the afternoon session, and we've seen almost an exact repeat of that activity today. So at the moment the FTSE is at 5365, the Dow we're seeing trading at 12,540. On the currencies, euro dollars at 125.60, cable at 157.100. On the commodities, gold is at 15.75 and Brent at 107.65. So as mentioned, yesterday was quite quiet. Over the weekend there was a poll in Greece that showed that potentially we could see the pro-bailout parties do well at the election on the 17th of June, which is why we saw the markets rally. We've also seen no real sort of follow through in any particular selling. There's a major highlight so far this week has been a deal by Spain and Bankia to be able to pass a lot of their debt onto the ECB, which has just helped with sentiment a little bit. It means that Spain won't necessarily have to go to the actual market to get any bonds in order to help prop up their banking sector. So that's an important deal that we'll watch closely as well for the rest of this week to see how that evolves. So far today we've seen Wolseley report figures slightly worse than expected, a little bit of concern obviously in Europe, things not doing too well, but also relative slowdown in the US, the economy there just looking like it's coming off a boil, and Wolseley obviously hugely exposed to the US economy, so that hasn't helped their share price today. On the economic data front today, we've got consumer confidence numbers from the US. Now those are expected to rise because obviously oil prices have come off, petrol prices there have fallen, so that tends to help confidence. But of course we've seen this big sell-off in equity markets, so we might see confidence fall. Tomorrow we've got Severn Trent reporting, and on the economic data front we've got UK mortgage approvals as well as some EU confidence numbers. Then on Thursday we have Tate & Lyle and Kingfisher. For the economic data we have consumer confidence from the UK. Now that is expected to decline, of course, no surprises really. Obviously the last reading of GDP numbers saw that the economy actually receded worse than expected, 0.3%. We also get German unemployment, but then really we get into the crux of the week. We get the preview to non-farm payrolls. We get the ADP US data, which is the private payrolls number. That's expected to come in at 136,000, up from the previous month of 119. We also get the second reading of US GDP data as well, and Chicago PMIs. Now those are meant to decline, so as mentioned earlier with Wolseley, the US economy just starting to lose steam a little bit. And then on Friday, of course, the climax of the week, we end with not only manufacturing PI numbers from the UK, which could dip below the 50 level, suggesting contraction in the manufacturing sector, but really the highlight is the US non-farm payrolls. Those are expected to come in at 154,000, up from last month that was 115,000. And of course we've seen recently the initial jobless claims just being relatively steady, so the week builds into the end with a crescendo of lots of US unemployment data. And that's it for this week. As ever, feedback media@capitalspreads.com.